Hello guys, my name is Professor Nikhil Varma, and this time we are going to look at corporate accounting second unit, which is valuation of shares. It's been long that since we have engaged a lecture for corporate accounting. But before we proceed with valuation of shares, I noticed a comment where a student wanted me to give explanation about the feature of goodwill, wherein I mentioned that it is recognized under accounting standard 10. Well, I had explained it in one of the slides after which comes after that slide, but I'll give an explanation once again. See, accounting standard 10 talks about goodwill in a way wherein it says that goodwill will be recognized only when there is um, a remuneration paid, or not exactly remuneration, but you have to spend money um, in order to show goodwill in your balance sheet, in order to be recognized by the accounting standard 10, it has to be a goodwill that is purchased. All right. Uh, that is what the accounting standard tells. You cannot self-generate your goodwill and show it in your balance sheet because you have not spent anything. You have not incurred any cost to get that goodwill. You're just mentioning that हमारा goodwill इतना है, but and you have used your own theory to develop that goodwill what you have generated. Let us assume that you are purchasing as a private limited or a public limited firm, you are purchasing another company. When you are purchasing another company, let us assume that the company is the net assets of those companies are valued at let's say 20 lakh rupees. However, that person is the person who's selling it, or the management of that company who's selling their business, say that they want to sell it for 25 lakhs only. They will not sell it for anything less than 25 lakhs. However, you have done your strategic analysis and you have to buy that firm. Okay. So what you will do, you will have to pay 25 lakhs. When you do the math, the net assets of the company are 20 lakhs, but you have paid 25 lakhs. Why would you pay that 5 lakh extra? That we will assume that you paid that 5 lakh extra because of the goodwill of that firm. Now that you have spent 5 lakh rupees extra to purchase that company, accounting standard 10 tells us that this 5 lakh can now be shown in your balance sheet, and you have to defer it and clear off that goodwill from your balance sheet in the next few years. Okay. This is how goodwill works. Goodwill shouldn't be mentioned in your balance sheet permanently. I hope you have understood. If not, post another comment. I will have another attempt in explaining to you the same concept. I don't mind. Well, now let us move on to the unit second, which is valuation of shares. First, let us look at